gave up managing millions to become a better investor. Episode 24. Before tech and the Fed, earnings season early, week 3. Hello, yes, the corporate earnings season still continues, and it's super busy this week. This is the peak week, as far as I can figure out statistically, which is exciting, but just a bit exhausting. Even after all this experience and time doing these earnings season, it's still busy, but it's exciting too. I thought I'd just sort of give a few views at this early part of the earnings season, because I know that if I leave it any longer, we're going to start entering some excitable technology sector insights from Alphabet and Microsoft, among others. We're then going to move into the Federal Reserve on Wednesday, a bunch of other numbers on Wednesday, and we won't even talk about the amount of companies reporting on Thursday too. So a quick few thoughts on companies that have given updates either on Monday and Tuesday this week. Some sort of summary insights from those and interesting matters that occur to me. So let's crack on and try and make this podcast not too long and lengthy, because frankly, there's going to be too much to talk about this week. If I start on Monday, it's kind of interesting because there's only really one company that struck me as interesting. That was Ryanair. Now, Ryanair is a company which actually is no longer listed on the UK market, but nevertheless, it's a fascinating company, not just because it has interesting peers. We talked about EasyJet in a previous podcast just under a week ago, but Ryanair actually is a leader in what it does. I thought the numbers that they published on Monday were actually pretty good. They slightly beat expectations, a bit like EasyJet. They were doing well in terms of recent months and thoughts. The share came back, though, and fell on the day and has fallen since they published the numbers, just because I feel that quite a lot is factored in with Ryanair. Number two, of course, there's been lots of very short-term issues. Unfortunate matters in southern Europe, impacts of wildfires, impacts of very hot weather, and problems with all of this. And it shows you again some of the natural sensitivity that occurs with anything in the airline and related sector. Nevertheless, Ryanair, is it a good company? Absolutely. Would I be a particular personal huge fan of going on their jets? Not particularly, but I've got to hugely respect what they've done and achieved over the last couple of decades. And certainly some of the updates they gave in terms of their progress, not just over recent months and quarters, but actually what they're planning to do in terms of adjusting their range and improving its capability over upcoming years. So interesting update. As I mentioned last week on a previous podcast, my personal investment preference in Europe is EasyJet, but unfortunately their shares have pulled back a little bit over recent days too, back again to the aforementioned issues in southern Europe. But there you go. Anyway, interesting update from Ryanair on Monday. Tuesday, aka today as I speak, a bunch of interesting insights, mostly in Europe, but some fascinating ones in the States too. I'm starting in Europe. Undoubtedly the highest profile, actually the biggest company reporting or giving an update today was LVMH, which published its half one numbers actually after the European market close. LVMH is a fantastic company. Must admit, personally, I'm not a huge owner of any of its range of products, but there you go. I guess there's something to dream about. But fascinating update from the company, because they talked positively about almost every one of their sectors, apart from, interestingly, the sort of the wine and the spirits area, where there was actually weak, because of tough comparisons, weak demand and weak sales in the United States. And that was actually something which was apparent across a few other parts of the business too. Some only had very hard comps, difficult comps. By contrast, China, for example, had very easy comps, maybe because they were coming out of quite a lot of the COVID lockdowns and related. You get those sort of natural volatility issues with both sales and profits. Overall, LVMH numbers were absolutely fine in terms of what they were saying and their hopes, ongoing hopes for the rest of this year and beyond. Is the share cheap though? I don't think so. For me, a buy price for LVMH is around about €750, and we're not there yet. So high quality company, huge tick on the box on everything that they've been getting up to. But is the stock cheap? Actually not. Interesting. I'm going to move from the world of luxury goods, I guess consumer in its most luxury form, to a slightly completely different world, and that of, I guess, a company with an agricultural focus is ADM, which actually is a very interesting company. US listed, you've probably heard of them or know the name from somewhere. Very high quality company, a company I've been impressed by for a very long time. My goodness, I must have been looking at them for 15, 20 years or so. It's kind of interesting, isn't it, when you look at the world of softs, of soybeans, of crush, of important exposure to various parts of North America, particularly South America, Brazilian market's been particularly important this year. You see actually some of the reasons why a company like ADM is very relevant for today's world. And we've talked before in previous podcasts about not just El Nino and food uncertainty and issues and related, but let's face it, soft agricultural spaces, and I've included them in my kind of broader area, sort of concerning a variety of sort of relating sort of focused manners concerning mining and energy stocks and related. When you think about commodities, people forget about including agriculture as well. And believe me, it's not just about oil and gas stocks or gold companies or core mining names or something. Believe me, the area of agriculture is still super important and interesting to look at. So I was really impressed by the ADM numbers again. And I wasn't surprised with the shares up today as I speak. Of course, there are areas which are a bit trickier. They've come off, again, some very good comps or very tough comps to compete against. So some of their comments on areas such as biosolutions, ethanol related had a small impact, but overall, do I think it's still a buy? Absolutely. Is fair value something at around about $100 level or even slightly above that? Absolutely. And therefore, somewhere in the sort of $83 level as I speak, is the stock still cheap? I believe it is. And yet we've also got a company that's buying back shares, paying an all right dividend, been around for absolutely ages. And actually, when you think about the importance of their sort of supply and importance in the general agri market, not just as somebody with in a kind of a more conventional way, but also in their capability to be a sort of a trading expert in that space. And that's again a way that many people may come across ADM in day-to-day life. I think it's absolutely relevant, very important company, and one that I still like. Every time we see the share over recent months at or around that $75 level, it was an absolute buy, in my opinion. I still think it's a strong hold and a buy on a bad day even here. So good company, good update from ADM. I really enjoyed that. Now on to sort of the world of sort of what you would kind of call, I guess, the chemical industry, which I guess I tend to put into the industrial sector space, just because of the nature of many underlying links with broader other subsectors and related. One from Europe, one from the US. The one in Europe was Akzo Nobel, which many of you will know as for their painting side. Really, when you think about Dulux and related, as one of their key products. Obviously, when they did the deal with ICI many years ago, but they've also got an important industry in other areas too. So Akzo Nobel, it's sort of a not particularly well known company from the Netherlands, but one which I've actually visited their site before and always been one I feel gives very good insight as to general progress that's ongoing in areas such as paints in terms of broader industrial requirements and related. Interesting insights today, I thought, in their numbers in terms of pricing power remains all right. Some FX sort of issues and impacts with that. I mean, let's face it, both the euro and the pound have been a little bit firmer than they were last year over recent months, which I guess is good, but also has impacts. Ditto free cash flow, which is always important to look at, but some of those sort of slightly easier comps, or if you like, some of the benefits from doing cutting costs or related, more apparent last year than this year, but still, debt's going down, progress is good, brands are strong. Is the company doing okay? They are. Is it cheap enough or good enough price to buy? I don't think so. I'm still waiting more for that sort of €65 kind of level, in my opinion. So one that I'm watching, always take a look at quarterly numbers, but I don't really need to buy today. Dow Chemicals was a sort of the US name, a kind of a rough PA, sort of in slightly different areas, but it's all in the sort of same interesting part of the industrial related chemicals market. Dow Chemicals is very interesting, actually. I remember when it was Dow DuPont, and you may recall that there was a big split there. And again, it's something we talked about in a previous podcast, how I think industry splits are becoming more apparent, or company splits. We talked about it with context to Johnson & Johnson last week. And it's interesting, it reminded me when I was looking at the Dow Chemical numbers about the Dow DuPont split, which I think was in 2019, if I recall, a long time ago now. But it's actually a three-way split of the company. But looking at Dow Chemical, again, it's a company a bit like Akzo Nobel I always go back and look at, because it gives me good insight into different areas of the market, many geographies in their case, and actually they're building some interesting exposures to areas such as Asia, where unsurprisingly the world of chemicals, the world of plastic and other supply arenas remain kind of important. I'm actually being quietly impressed by Dow Chemicals' range of relative progresses over recent quarters. Yes, obviously there's been some tricky matters, and during the world of COVID, issues with high gas costs and related over the last 18 months or so. But such matters, I think, are being well managed. I mean, pricing power here is probably better than people think, mainly because if you do require the product, then you've kind of got almost no choice if you're an underlying user. When I look at Dow Chemical, I do also observe is, again, an ability to buy back shares, an ability to produce a dividend of over 5%, which is covered by free cash flow. And even though whenever I hear the words such as plastic, I kind of think, I'd much rather be holding some of the names in other sort of broader affiliated areas of a different type, names such as DS Smith or related, who have kind of moved away from plastic. We'll come and talk about that company in another few weeks' time. But I kind of feel I'm still quite respect what Dow Chemical do. So for me, every time I see the stock at the moment, below $50, I think it's actually cheap, mainly because from a total return perspective, you're at that point, a bit like some other companies I've mentioned in the last week or two, where I'd rather own Dow Chemical shares than a 10-year US bond. And the answer is yes, because I think the total return you can get from it will be better. And, frankly, that's kind of interesting, in my opinion. So keep an eye on companies such as Dow Chemical. Yes, it's a bit, it feels a bit different. Certainly when we move into technology and other areas which are perhaps some people find more exciting, they'll forget the Dow Chemicals, but that would be wrong. The importance of investment always is to look at a range of sectors, a range of countries, a range of exposures. You'd be surprised we come up with things where people hate or dislike or don't really follow. Suddenly you find some great opportunities there. So Dow Chemical, below $50, kind of interesting in my opinion, ceteris paribus. Raytheon, or I've got a new name now, RTX, which is obviously some kind of simplification. They announced it the other week, still call them Raytheon though. You'll know Raytheon probably from various military, space, aircraft engine and related angles. Clearly many of those areas, particularly obviously the military angles, have given them, I think it was, if I heard it correctly on the conference call, a 200 billion set of future sales potential to various, not just the US Army, airline industry, etc., but obviously they mentioned Ukraine inevitably and other countries too. A very relevant respected and obviously a longer-term focused company. It's kind of interesting. Raytheon, sorry, I must quit it right now, RTX. I've always been sort of thinking that kind of circa $100 level. Ironic how its sort of price is akin to that kind of level I had for ADM I mentioned earlier. It's kind of interesting though how Raytheon shares were kind of kicking around at about the right level, I felt. But they've fallen actually quite sharply today. When I last looked, they were down well over 10% on the day. And that was because they talked about at Pratt & Whitney, one of their key sub areas, a number of challenges and issues, and certainly the world of internal sort of powder metal issues. I know that sounds terribly geekish, but believe me, when you're looking at companies and doing a bit of qualitative research, it's the sort of information you come across and get excited about. When I heard about that and how they're going to have to spend, certainly they've reduced their free cash flow indication numbers by about 500 million in order inevitably to spend on making sure that none of their Pratt & Whitney engines and related are going to have issues and problems as a consequence of this challenge. And possibly the indication was that they could be spending more going forward as they inevitably go through their whole range of engines that could be impacted by this. They've made the adjustments, fortunately, now for any newer engines or engines, I think, over the last couple of years. But clearly that leaves them still with a huge back catalogue of, 10, 15, 20 years of engines, which they've got to look at carefully. So at least they're doing a decent job on that. But of course, inevitably, it causes concern, costs money, makes people a little bit worried. What does it mean about Pratt & Whitney They're very good exposure. I like the fact that the company has managed to solve these issues. But clearly the thing with engines is that it's actually not on selling them in the first place where you make the money. As I heard many years ago when I was speaking with Rolls-Royce, I remember, which is actually one of their peers with a smaller market share than Pratt & Whitney as it happens. But I remember Rolls-Royce saying to me that the real value comes in the retention of that engine, and a bit like anything, as those years roll on, you get that sort of repeat set of revenues, and that's how you make money on the world of engines, sort of make sure that they're being used for 20, 30 years and related. So this sort of issue, you can understand why it pushes back the share on a day like today of RTX, aka Raytheon. I actually think it's a little rude, though, given the fact they seem to have sorted the issue. They've got to adjust, obviously, part of the historic engines that are impacted, and it's going to cost them a lot of money, probably more than that 500 million they've put aside at this moment in time. But when I see the stock in that kind of sort of mid 80s, $80, $85 odd level, I kind of feel it's a little bit cheap. And a bit like my previously mentioned comment about ADM, essentially what I guess I'm trying to say is whichever share price is cheaper out of ADM or RTX, buy that one, because they both should be trading at nearer $100 at some point over, let's call it sometime over the next year. So that's, reasonable return scope, plus you're getting paid some dividends and quality medium-term focuses. Actually, both companies will be in very different ways, in different manners. Final company I was going to mention was Unilever, big, obviously, consumer goods company or fast-moving consumer goods player. Actually, I think the company is particularly cheap. There's a whole load of its peers coming out over the next couple of days or so. It's intrigued and interested to hear what their new CEO was talking about, though, at Unilever. He's only been in the job 3 weeks. So unsurprisingly, his main insights are going to come at the next quarterly numbers in 3 months' time. But for me, I saw Unilever shares actually responded quite well to the numbers today. They were up 4% or so, I believe, in London trading. But are the stocks cheap? No. Are there other names I prefer? Yes. Are some of those reporting over the next couple of days? Yes. Will I be talking about them later in the week? Yes. Would be a sort of a quick summary of it all. But that's how I see it. All I do know is that it's going to get busy a little bit later today. We're going to, after the US markets are closed, we're going to have interesting updates from Alphabet and Microsoft, which I'll cover in a future podcast at some point over the next 48 hours or so. And in about 24 hours of time, or just under as I speak, got the Fed coming out with their thoughts. ECB on Thursday, actually Bank of Japan on Friday as well. There's loads of things to talk about. So the world is not just about earnings, it's about some macro matters as well. It's busy and exciting and interesting. And we haven't even mentioned the updates that the IMF gave today on their thoughts about economic growth. Maybe I'll factor that in it on a later podcast. We shall see. But thanks very much for listening. I hope that was interesting. As you can see, lots still to think about, lots that I'm using about, but a couple of ideas I think out of today's thoughts, and certainly as usual, as I find most useful about the earnings season. Every time I get numbers, I get views, I get opinions, I'm updating my own internal targets as to what is the fair value of a company, what price would I buy it at, what price would I perhaps sell the shares at if I have a holding, etc., etc. The world of investment, as always, is about keeping researching basically, and it can't just be done by a computer. The human can still add a huge amount by listening to conference calls, by thinking about what was said, thinking about what the wider world is saying or doing, putting it all together and finding something interesting. As always, same old for me. Exciting stuff, but busy. So anyway, thanks very much for listening, and speak to you soon later this week. Bye-bye.